As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely. It is a soulful Super Bowl Sunday afternoon. Absolutely, it is. It is February 11th, 2024. All right. And this is the weekly trade watch list. I'm going to do my absolute and utmost best to keep bringing this to value every single week, every single Sunday before the market opens. Okay, it's the weekly trade watch list. Okay, from February 11th, 2024 to February 17th, 2024. Absolutely. So, right here, we're looking at gold on a 1 minute time frame perspective. Now, as I always said before, this won't be the first time and this won't be the last time. The market moves in cycles. When you understand how the market prints in cycles, you'll be able to capitalize off of trading pro trend or trading counter trend with the market, with and against the market. Okay. So, right here are five trades I've taken myself on the M1 time frame on gold. You should not be afraid of the M1 time frame because here's the deal: unless you should trade based on your personality chart. If you are an individual that has no patience at all, you should not be looking at a time frame no higher than the M15, which is the 15-minute time frame. Anything above that is none of your concern because you are not a patient person. You should trade based off of your personality type. That's why it's four different types of traders. You have scalpers, you have day traders, you have swing traders, then you have position traders. Okay. The thing about me, I can be either one. I can be either which one of them. It doesn't matter to me. There's not a personal preference that I have, So I can scalp, I can intraday trade, I can swing trade and position trade. It's all the same. But the higher the time frame, the level of patience has to increase as the time frame increases. If you want to become a swing or position trader, you have to develop more patience, and you have to be emotionally intelligent and in check with yourself. All right. So here's the deal. Right here on the M1 time frame, some trades that we have taken in the previous week that just passed. So here's the deal. The market moves in cycles, right? So the thing about it is this. Thank God for Richard DeMille Wyckoff. He is the individual, one of the five titans in trading that developed the Wyckoff method when it comes to the market. So the market moves in those cycles. And thing about it is, I can help you myself. You want to simply become a part of a free trading community chat that I run and a free trading signals chat that I run. The description is going to be in the link at the bottom of this video. Okay. And so right here, you see these abbreviations. These are nothing but a Wyckoff distributive schematic abbreviations, a Wyckoff distribution schematic abbreviations. And it's simply, this one is it doesn't have it in the book as far as the one that Ruben Villahermosa Chavez written, the one that I have, the Wyckoff methodology in depth, how to trade financial markets logically. But this one is I've dubbed it a type 3, where it creates the upthrust and then the market simply changes character after that. So I knew this was happening because of what has been previously printed. I knew right here that the market, in order for the market to go up and break above this structure right here and go bullish, previously on the lower time frame, you must have an accumulation and a reaccumulation that did what? Broke structure up above and created a new high. Okay. So what creates a higher high, and it's something that I went over on my Zoom session. I do a Zoom session 7 to 8 times a week with a minimum of an hour, and sometimes it reaches 2 hours because it's such a great vibe and we're learning so much. I believe I put it on the monthly on gold. I believe I have it on the monthly on gold where I simply type this out. Yeah, I did. So right here, um, where we're looking at as far as the M1 time frame, this right here, where was looking at a distribution schematic, right? So a distribution can be printed from a redistrib a distribution can be printed from a redistribution distribution cycle, which that means it will be a lower high in a downtrend. A distribution can be printed off of a old distribution, which means that it's also going to be a lower high in a downtrend. And a distribution can be printed as a higher high in an uptrend. In that case, that what we're looking at an M1 time frame on gold, this was a um, this was simply a uh, distribution that was printed as a higher high. Okay, because right here in this area, we can see that price right here accumulated, reaccumulated, and broke this structure right here, created this high. Price then created a distribution, redistribution, right? Then the market did what? Accumulated, reaccumulated, and broke this structure and created this high. Okay, you must understand that. So the thing about it is this: I knew that I was looking at a distributive schematic or a distribution cycle. Why? Because I knew right here on the M5 time frame, the market had just printed the market had just printed a reaccumulation. This is on my M15 right here. That purple's on my M15. And by the way, I strongly advise to you, every time I see a color, I know what time frame is on. If you're an individual that simply uses one solid color for all the time frames, being the monthly, weekly, daily, 4 hour, 1 hour, 30 minute, 15 minute, M5 and M1 time frame, use that one solid color, you'll get lost within your analysis. You'll get lost in your own sauce. So I myself recommend that you do different colors for different time frames. So me personally, when I see something black, this is on the M1 time frame because I didn't want to clash with the colors as when I was instructing on the Zoom call. So don't worry about that. This is on the M1 time frame. That's why it's yellow. So black is on my monthly, pink is on my weekly, red is on my daily, blue is on my 4 hour, green is on my 1 hour, gray is on my 30 minute, purple is on my M15, orange is on my M5, and yellow is on my M1 time frames. Okay, so when I see the color, I know the time frame I put it on. I know the time frame to go to. All right, and it helps out a lot with me. So that's something I strongly recommend. But these 5 trades is simply gonna go over this that we simply took, right? So here's the deal: price accumulated, reaccumulated, broke the structure, right? This is a preliminary supply when it comes to a this is an event within a Wyckoff distribution schematic. Okay, the preliminary supply is printed first. Then I seen the market have a buying climax, automatic reaction, secondary test, minor sign of weakness, and then broke up above here, accumulated, reaccumulated, and created the upthrust. Now, when I simply pull up the RSI, which is called the relative strength index, you will see how this is slanting upward on the candlesticks, but in the same exact area on the relative strength index, it is slanting downward, which you call that a bearish divergence. And then price simply changed character right here at the minor sign of weakness. So when we pull that up, you can see how price right here in the same exact area lined up with the buying climax, lined up with the upthrust. You can simply see how price started slanting lower. Okay, in the midpoint, which is the last area within this Wyckoff distributor schematic, where price last accumulated, reaccumulated, broke this structure, created this high. So you're thinking now, okay, cool, we're uptrending, right? But the thing about it is these market makers have to do what? Make this look like an uptrending market, make it look like that the market is going to go bullish outside of the cycle. Okay. They have to generate and attract individuals, uninformed traders and ill-informed traders, to push the buy button on their trading device. Okay, so they're inducing people to do what? Push the buy button into the market, knowing they're in a distribution cycle, right? People buying here off that accumulation, reaccumulation, and then bam, drop the market, right? Because now your buy orders are in the market, they can now sell. Because here's the deal: there are always an equivalent amount of buyers and sellers in the market. Okay, the market doesn't go bullish or go up because there are more buyers than sellers, and vice versa. The market does not go down because there are more sellers than buyers. There always have to be an equivalent amount of buyers and sellers in the market. Have you ever went into your trading platform, being MetaTrader 4, MetaTrader 5, or any other trading platform, and you simply click buy or sell on a trade, and it did not go through, knowing that you have enough money in your account balance, enough capital in your account balance in order to get into this trade. You're not over leveraging, using proper risk management. The thing about it is this, because when you click that buy button, they could not find another order in the market to do the opposite of what you were willing to do at that price. Vice versa, if you click the sell button, they could not find a buy order in the market to do the complete opposite of what you wanted to do. So the transaction or the order simply does not go through. Okay, until they could find somebody on the opposite side. Because here's the deal: when you buy something, you can't buy it unless somebody is willing to sell. And in order to generate profit from a sale, when you sell something, somebody must be on the opposite side willing to buy it. Okay, and always when you are taking lessons in the market, when you're taking lessons in the market, somebody's profiting off of that. When you're taking profit in the market, somebody on the other side is taking lessons. Okay. All right. So that's a real skill about that. All right. So now right here we see the market accumulate, reaccumulate, and your reaccumulation, your redistribution is going to be in some type of form of a channel or a funky looking triangle. All right. It's going to be in some type of channel or triangle. Your reaccumulation, your redistribution. Now here's the deal: we have 4 market price cycles, right? The market prints in this order, okay, and it doesn't print out of order. ARDR, which is accumulation, reaccumulation, distribution, and redistribution. All right. Excuse me. Accumulation, reaccumulation, distribution, redistribution. Okay, the market prints in this order on every single time frame. Does not skip a cycle. Okay, because you have 4 market price cycles, that means you have 4 POIs, or points of interest, which are simply areas of interest where a future accumulation or a future distribution can appear in this market. Okay, so here's the deal: the market simply tapped into this demand zone, right? Accumulated, reaccumulated, broke this structure, created a new high, and then what? You can see the divergence in between here, how prices did what? Slanted upward, slanted lower right here on the RSI. This midpoint right here where price last accumulated, reaccumulated, broke this structure right here, created this high. This has now become a what? Internal bearish change of character. Now what leads to a bearish change of character below? What leads to a bearish change of character below is internally on a lower time frame, a distribution, redistribution, and leads to a what? Bearish change of character. Okay, so now we have this distribution right here. We have this redistribution, right? And price simply did what? Change character right here. Now, how did I know that price was going to simply change character? Because we had the reaccumulation imbalance. The imbalance that came out of the reaccumulation, that was a what? Bullish POI, a bullish point of interest, where the buyers could then come back into the market. Okay, but because this distribution, redistribution caused this reaccumulation imbalance to fail, once that reaccumulation imbalance fails, you now know that a distribution must be printed. Excuse me, a redistribution must be printed. Once the reaccumulation imbalance fails, you now know that a redistribution must be printed in order for this market to go down again. Okay, so price went past this reaccumulation POI and this accumulation POI and then caused what? A change of character, a bearish change of character, right? So now market did what? Accumulated, reaccumulated right here, right? We can change this yellow since it's on the 1 minute time frame. All right. So price then did what? Accumulated, reaccumulated. Now here's the deal. This is a what? Bearish POI, a bearish point of interest, where the sellers could then have the potential opportunity to come back into the market. But you see that the bulls were stronger and it went past this redistribution imbalance point of interest, right? So that means when the price went up like this, when price failed this point of interest where the sellers could then come back to the market, the bears could then come back to the market, this has to be a reaccumulation. Okay, so now the price did what? Accumulated, reaccumulated, tap back into the what? Tap back into the distribution supply zone, that POI, and the sellers then reappeared in the market to then do what? Sell this thing down. So guess what? Where, you probably asking me then, where do we enter? Where do we do our sell market execution? I'm glad you asked. So here's the deal. Right here in this area, right here in this area where you seen how you had this bullish impulsive move right here, right? Then you see a green candle right here, another push up. As soon as this green candle was violated right here, as soon as you seen price, and I say close gives you confirmation, which means the close of the candlestick gives you confirmation. You do not want to do a market execution while the candlestick is still cooking. Okay, if you're on the M1 time frame, guess what? You're going to have a little clock over here where the allotted time is going to be decreasing, letting you know when how long this candlestick has left to complete, and then the next candlestick is going to come out. Okay, every 60 seconds, especially on M1 time frame, another candlestick is printed. So when price closed right here and broke through this wick right here, this candlestick, that's where we entered for what? Sell market execution. Stop loss simply above the what? This distribution high, this up thrust. And then we look for what? We were simply looking for an M5, an M5 TP. So we were simply looking for an M5 TP right here, right? Because we see how price last did what? Accumulated, reaccumulated, broke structure right here. So we were all shooting for this M5 TP, meaning the 2131.51 area on gold. Okay, so that's trade number one, right? Let's go over how we simply took the other trades. Okay, so price what? Distributed. That means, hey, we have a reaccumulation POI. This is a possibility for the buyers to then come into the market. But as you can see, price tapped into this reaccumulation, went up, but it failed. It failed. So this has to be a what? Distribution, redistribution, and then price came and did what? Tapped into an accumulation right here. This POI right here. It did what? Accumulated, reaccumulated, right? Right here, this redistribution POI had a little miniature sale, but then the accumulation POI right here bought it back up. And you can see how price simply diverged right here, a bullish divergence. Right here, you had an internal bullish change of character. Now, what leads to an internal bullish change of character is a lower time frame accumulation, reaccumulation that causes the market to go up and have a bullish change of character. Okay. And as you can see right here on the RSI, right here on the candlesticks, price is slanting lower. On the RSI, the same exact area, you see price slanting upward. That is called a bullish divergence. Okay, so I simply saw, okay, cool. Price, okay, accumulated, reaccumulated, bullish change of character, tapped into this what? Distribution POI right here, and did what? Start selling off, okay, temporarily, right? So then price tapped into what? This accumulation POI. Did a what? Divergence, internal change of character, and did what? It broke structure. So now we're internally bullish on the M1 time frame until price came back up here. Remember, after price breaks structure and creates a higher high, you're then going to be looking for a distribution. Okay, so then you can see how price did what? Slant upward a little bit up on the candlesticks, and the same exact area on the higher side, price slanted lower. This midpoint, excuse me, this midpoint right here is an internal bearish change of character. Okay, at that point, you could have then went in for your sale because bam, this has determined that the sellers are taking over. Market execution right here, stop loss above the distribution. Okay, and we're still going for that what? 2031.51 area. Okay, we still following price. Price doing what? Breaking structure lower, right? And so here's the deal. We were just simply following price. We were just simply following price. When price breaks a structure, when price breaks structure below, right, it is now deemed a lower low. You're now going to anticipate an accumulation. So you can see how when price broke structure below here, you can see how price accumulated, reaccumulated, came back to a what? Redistribution, POI, distributed off of it, right? Sold off again, broke structure, accumulation, reaccumulation, tap back into a what? Distribution POI, simply did what? Sold, distribution, redistribution, broke structure. Oh, here we go, accumulation, reaccumulation, right? So here's the deal. Right here, when we see price tap into this old distribution POI, we simply did what? Waited for the sellers to come back to the market, did a market execution, stop loss above the entire distribution, and we sold off to that what 2031.51 area, that M5 POI. Okay, so here's the deal. Simply did it again. Price broke structure, accumulation, reaccumulation, tap back in. We did what? Wait until the sellers come back in, distribute, boom, sell market execution, right? Price broke this old structure, old low, created a new low. Now price did what? Accumulated, reaccumulated, right? This is another distribution. Could have sold at that, boom, right? So then price came over here again. We did the same thing. Price broke structure, it accumulated, reaccumulated, created a bearish divergence, which is also known as a Wyckoff distribution schematic, had an internal change of character. We sold from here, right? So as you can see, price sold off. We have 5 trades, 1, 2, 3, 4, 5, with a total of possible 5 plus 5 is 10. 10 and 7 is 17. 17 and 7 is 24. 24 and 14 is 38%. Possible overall, if all of them would have hit TP, 38% profit. But hey, it's okay. 26 pip stop loss on gold, 51 pip stop loss on gold, 59 pip stop loss on gold. Then you had a 84 pip stop loss on gold, and then you had a 120 pip stop loss on gold. Okay, so here's the deal. Real spill. Ended up taking that millionaire nap, billionaire nap, right? Because I took this during the Asian session. Price simply what? Accumulated, reaccumulated, reversed, took me out. Stop loss got hit on this possible 14% return. Stop loss got hit on this possible 7% return. But these 3 right here, trade 1, 2, and 3, all hit TP right here on the money. As you can see, that M5 point of interest, and we simply bag 15%. Okay, because I have to deduct the 1% less and 1% lesser from here. Obviously, 5 and 5 and 7 added together is 17%, but minus 1, that's 15%. Okay, so with these 5 trades, total of 15%, could have had 38% if all 5 of them would have went ahead and hit the M5 point of interest TP. But hey, can't complain about bagging 15% with just your with your mind. All right. So what we're going to do is simply, since this is a weekly trade watch list, and like one of my bros from Florida, Ron McCray Oliver says, you need to take this week's trades deserve this week's eyes. All right. This week's trades deserve this week's eyes. You don't need last week. So guess what? We have to erase and delete all of that, which is just simply by the click of this button right here and just bam, erase. Right, let me reset my chart. So the thing about it is I'm going to go to the M15 because I want to see different points of interest on the M15 to catch more pips. Because on the M1 time frame, the smaller time frame, the more you have to be geared in to your trade, the more you have to screen watch and things of that nature. But you can be able to trade every single time frame. It's the same stuff. So right here, we see we have a reaccumulation. All right, some type of funky triangle, right? See, we have a reaccumulation right here. All right. So we see price has blown through this reaccumulation POI. That's all fine and dandy. It's all good. We see price has already came back and tapped in to this distribution right here. That's all fine and dandy as well. All right. So let's see. We have a POI right here because price accumulated, reaccumulated, broke this structure right here internally. Internally, this would be a breaker structure right here. 15-minute breaker structure above. So what I see is simply gold. You can put this around where possibly the buyers can then come back into this market off of this area. You have the 2018 area, 2018-17, and 2015-73 area for a possible buy entry. Now, here's the deal. This is a point of interest, but that doesn't mean slap a buy limit pending order on that and call it a day. No, that's why a lot of you take lessons on your trades because you simply, oh, cool. Orlando said it's a POI. I'm going to just go ahead and do this. No, that is not how you trade professionally. Okay. What you want to do is, okay, I got the zones marked out. I got the area marked out. Now what you want to do is set alerts. You can set the alert saying, okay, cool. You want to know what? Let me set an alert for right here. This is a gold. Um, let's see if it pops up. This is gold. You don't want me to add alert. It's supposed to pop up. But anyway, what you can do is place the horizontal way at the top, place one at the bottom of the wick, right? And what you can do, you can set an alert. There'll be a little clock, and once price hits this area or hits this price number, it can alert you multiple times. It can alert you through TradingView on your desktop. It can alert you through TradingView on the app. It can alert you through email, the email that you signed up using TradingView that's attached to your TradingView account. It can alert you multitude of different ways in order to let you know, hey, gold has hit this 2018-17 area. All right. So you can see how price simply diverged right here, right? And then price had an internal change of character, right? So you knew at some point in time this was going bullish. What I like to see is this. So I'm telling y'all, wait till this boot camp come out. I'm putting a boot camp together. So price diverged right here. What I can see is a distribution, right? Right here you can see a change of character. Right here. All right, 15-minute change of character below. All right, so after the price had changed character, came back to a distribution, and then did what? Distribute, redistribute, and then had a what? Internal breaker structure right here. Which right here you call it 15-minute BOS. All right, 15-minute breaker structure below. All right, price simply did what? Accumulated, reaccumulated, tap back in to this supply zone right here, and then did what? We're looking for a distribution, redistribution to do what? Possibly do what? Break this structure below. Right here, we don't have a breaker structure yet. But that's our anticipation because price is internally bearish on the 15, right? So we're thinking that, hey, once price probably tap into this POI right here, it may want to do what? Go back bullish because we do have a what? We do have a redistribution imbalance sitting right here. We do have an imbalance sitting right here. Let's zone off this area. We do have an imbalance sitting right here. So price may want to do what? Accumulate, reaccumulate, and come back up here, reach this imbalance, and then have a future distribution off of the zone. That is all possible. I'm not telling you what it's going to do. I'm just telling you what it possibly can do. All right. So I would simply be cognizant of this area on gold, possibly for a accumulation buy, but you have to wait until price taps into that level and then give you the parameters for a Wyckoff accumulation schematic. Let it diverge, let it change character. Once it changes character, you then have a confirmed entry that, okay, cool, price is now going bullish on this lower time frame. All right. So that's gold. Let's see. You have an imbalance. So let's see. According to the M5 time frame, we see how price has accumulated, reaccumulated. Okay, we see a possible reaccumulation triangle forming. You can see this supply zone has not been mitigated. This supply zone right here has not been mitigated, right? So a possible future distribution may come off of this area when the market opens. So I'm gonna mark this zone out. All right, because I see price, it accumulated, reaccumulated, it distributed, redistributed. It didn't break this accumulation low right here, and then what it did what? Accumulated, reaccumulated, and broke this structure, had an internal change of character. But let's see, this is the change of character, this is the breaker structure. So right here, it's the change of character. So there's a 5-minute change of character above, right? And then this right here is a 5-minute breaker structure. All right. So looking at price, probably wanting to reaccumulate right here and then go up and possibly create a future distribution off this level. You just have to wait and see. I think I can't set alerts because because the market is not open. And technically the market is open, but it's not open on global. I don't know. We'll see what's up. That's all good. So what you want to do is not be married to a bias. You don't want to be married to the buy or the sell. You want to have yourself set up for either or. You're set up for either or, regardless of where the market prints. Okay. Regardless of what the market does, you're set up for a buy or a sell. All right. So that's all I see on gold as of right now. Um, just wait till next few coming days or whatever the case may be. See what gold wants to do. All right. So let's see what else pairs can we do. People like trading USD CAD. So I guess we can look at that. All right, let's go ahead and erase USD CAD had going on. All right, we're on the M15. All right, cool. So what I see is price accumulated right here. You can see how price diverged. First of all, this is an internal accumulation, reaccumulation, break of structure. Price did what? Distributed, redistributed, broke below here, right? You can literally see that this is the redistribution, right? So then price decided to do what? Tap into a POI right here, accumulate, reaccumulate, break the structure, right? So now you see how price has done what? Right here is a break of structure. Let's see, 15-minute BOS above. Okay, we can see price did what? Got a little funky triangle, funky little channel triangle, right? This is a reaccumulation, right? Well, we see how price did what? It had to create a distribution, right? Price tapped into a supply zone right here, distributed, redistributed, broke structure right here. Okay, so now we're looking at this reaccumulation POI did not hold up because guess what? Price would have simply did what? Diverged off of this reaccumulation imbalance and went back up. But so we know for a fact that this entire thing right here is going to be a redistribution and fall down lower. And so now we're going to be looking at what? This accumulation right here. We're going to be looking at this accumulation right here. We're going to be looking at this accumulation zone right here for USD CAD. Yes. All right. All right. So what you see how price felt this reaccumulation right here. So now price has to go down to another POI to possibly accumulate off of, which is this accumulation on the 15-minute time frame. All right, this level on USD CAD. Right, you don't simply have to wait for that. You can go to the M5. As you can see, price tap into the distribution level right here. All right, price simply tapped into the distribution level and failed this reaccumulation right here, failed this reaccumulation imbalance. So this right here has to be a redistribution on the M5 on USD CAD. All right, and then the POI for the possible accumulation will be right here. These zones right here. All right, but everyone, I appreciate you all for tapping in. That's simply my time. I appreciate you all for tapping in. I'm super grateful. I'm super thankful that God has given me the ability to be a cheerful giver. Just pouring out from the kindness of my heart, doing these daily or weekly videos that I supply. So I appreciate you all for tapping in. As always, next time I'll be live doing a YouTube is probably at minimum next week. It for sure will be a weekly trade watch list next week. But as always, I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated, and I would never ever take it for granted. Have a safe, blessed, and productive rest of your Super Bowl soulful Sunday evening. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose, but more importantly, God has blessed us with our name on it. Always remember to be addicted to information, but never allergic to execution. Also, remember that it's nice to be important, but it's more important to be nice because every single individual human being in this world is going through some type of challenge, obstacle, or battle. And many of us are going through multiple challenges, obstacles, and battles simultaneously. So be super cognizant and aware and intentional on what you need to say, on what needs to be said, and take into consideration your delivery method and who the recipient on the other end of that message that you need to deliver. Because your intent is to be transparent and your intent is to not to cause harm. All right. Also, remember that people only rock with you for two reasons. Either you've been official or either you are beneficial. Just know the difference between the two. Uh, Never stop studying, never stop learning, never stop teaching, never stop educating, never stop grinding, and most importantly, and certainly not least, never stop praying. I will see all of you in the future on a next YouTube live video, God willing. All right, y'all take care. See y'all another time.